Fastighetsfonden Baltic Horizon som äger och förvaltar fastigheter i de baltiska huvudstäderna gästade oss i november. Nu är det dags att ta in nya pengar och vi har tagit in förvaltaren Tarmo för att diskutera och få veta vad är det pengarna ska användas till. Welcome Tarmo.
Thank you very much.
Nice to have you here.
Good to be back.
Good to be back. We saw each other in November, and for those not familiar with you or with Baltic Horizon, what do you do? Who are you and what do you do?
I'm the fund manager of the first listed real estate fund in the Baltics, and we manage commercial real estate cash flow assets in the Baltic capital cities.
And when you say cash flow assets, that's very important for you because you actually want to find those real estates with the best kind of cash flow or good cash flow. What do you mean by that?
Yes, we look for cash flow assets that have long-term tenants and with long-term lease agreements, so that we are able to pay regular dividends to our investors. And we are really a dividend investment opportunity as such.
And just briefly update me on what is the performance, what have you done, what is the activity of Baltic Horizon since we met in November? Any new properties, any new information about the company? How do you proceed?
Yes, the equity that we raised in November offering, and after listing the fund in Stockholm, we have placed that equity into two new properties. One retail property in Tallinn and one office property in Vilnius, and we are also using some of that equity to complete the expansion of one of the assets that we bought 3 years ago.
And when you were here the last time, we spoke about where you buy the assets, where you buy the real estates in those capital cities. It was just outside the central business district, if I'm not wrong.
We target retail and office properties, both in central business districts, but also in established neighborhoods, in established clusters. And I think we are definitely trying to capitalize on the trend of nearshoring, welcoming, Nordic tenants more and more to establish their back offices in the Baltic cities.
Because we see in Sweden, we see the prices going up, both for households and also for commercial real estates. What about the prices in the Baltics? What about the performance in the prices? Do you have to pay more for the real estates you might be going to buy now? And when we compare that to the prices you had to pay just a couple of months ago?
I think it's always not easy to make good deals, good transactions, but the prices are continuously going up. But I think in the Baltics the appreciation is much more stable, and we are still targeting very similar yields that we targeted in November. So I think overall the investment case is continuously very attractive.
And those not familiar with the yields that you want when you buy the properties, what is the target for the yields on the real estates?
Today the portfolio yield is approximately 7% based on the valuation, so we target similar yields.
Yeah. And what about the macroeconomic outlooks? As you say, the world changes on a fast pace, and even though since we met, there has been some change on the political arena as well. How do you see the change in the macroeconomic outlook since November?
Well, of course, since November, the world has changed a little bit, and but we still look at things locally, and we assess things locally. We still have a very good cooperation with the Nordic countries, so definitely that trend is continuing. And so maybe surprisingly enough, the world export markets are also coming back. So actually, the GDP forecast for the Baltics for the next couple of years is approximately 3% per annum.
Well, you had a phenomenal GDP growth since the financial crisis. It was kind of harsh back in the Baltics, but then now it's kind of much better, and we've seen so forth that you say the GDP growth, but there's always risks everywhere under every rock. Is there any particular risks that you see in the real estate market? Well,
first of all, the economies, we have full expectations for them to perform above European Union averages, and 3-4% per annum over the coming years. The employment is increasing, and so are the value-added sort of jobs that we can now do in the Baltics. In real estate, you of course have to look things very much in detail. If you talk about risks, then for example, we evaluate very much what is the supply and demand of new office space in Tallinn, Riga and Vilnius. And I would say that the risks perhaps today are the biggest in Tallinn in terms of new supply coming to the market, whereas in Riga there's very lack of supply, so we can actually get higher rents. But that's the how would I say, that's the essence of our fund, to be diversified across those three cities, because those three cities are still all very different, so we can diversify the risks and overall portfolio level benefit from it.
I mean, that is very interesting though, what you're saying about the GDP growth, the employment rates, and the demand in the market for the real estate as well, for the office buildings. Do you see what do you think about the Baltics going forwards, this growth you're talking about, and the supply in the market? Do you see any risks that oversupply will drive down the prices? I know that you've said about 18,000 square meters for the office buildings in the Baltics. Sounds kind of low if you compare it to Stockholm. Just to make that comparisons, you have the international tenants.
Yeah.
So the comparison might be fair.
That's a very good question, and I think that's why we are on the ground in each of the cities. We actually know the property market inside out, and we try to focus where are the risks are highest and where are the opportunities the biggest in our micro locations. I would say that new supply of new offices is only good, because we have premises then to offer for those international tenants that are continuously expanding in the Baltic capital cities. At this point, if you look at Vilnius, for example, there's a lot of buildings being developed, but also the demand is strong. So one would, from outside look that yes, a lot of buildings are being built, but also the demand is actually picking up and holding up.
But will you take that stake in the market as well, being one of the players in the Baltics? Will you be able to develop new office buildings, or are you only on the buy side, or are you on the project side as well? Or will you be on the project side in the future?
We don't take development risk. We don't develop. We work with development partners. What we do in our portfolio is, of course, work with the properties and use the expansion rights that we have in one property. Like in Vilnius, in one property, what we're doing is stage 2 and stage 3, and in this way we are somewhat together with the developer, adding new space, but it's a controlled risk from our side. We don't do speculative investments into land plot and then construction management as such.
And last time we saw each other, you said that you had strong Nordic and international tenants. Can you say anything about the tenants? We would like to hear about the tenants. Which tenants do you have, and has there been any changes, new tenants coming into Baltic Horizon real estate since November?
Since our property stock is new, we have attracted a lot of good international blue chip names, and of course many are familiar, I think, also to this audience. I mean, Swedbank, SEB Global Services, Cabot, Vapiano, G4S. Latest tenants are Lindorf with their back office, and we have also Vilnius municipality water company as one of governmental local tenants. So we really try to keep the tenant mix very blue chip, because there's a key reason for it, because those type of companies are there with a long-term vision, and they sign long-term lease agreements, and they're professional partners. And with the portfolio that we have, and when it grows, when the fund grows, then we are all able to offer them also solutions when they, for example, grow, or when they reduce, maybe potentially in the future. We have very long-term vision.
This is well-known brands you're talking about, the well-known brands for the Swedish air. Is it just the brands that we are familiar with, or is it the big weighting in your portfolio? The weighting, if we compare local brands that we might not be familiar with versus the strong international brands that we all do know and hear about?
Well, I think we also have local tenants and local strong companies as tenants, but I think majority, if not vast majority, have international background.
And in the end of first quarter, you had 9 properties for 156 million euros, and now you're raising new money for a new rights issue. How much are you going to use? Or I guess you're going to use and put all the money in work, but what are you going to use the money for? Do you have any real estates in the pipeline?
We continue to invest into retail and office properties in Baltic capital cities at low 50% leverage, and we have a strong pipeline. Always do. We work with the market to see what opportunities arise, and the properties that we're looking are very similar. You know, they must be new buildings, they must be established, and they must have a strong international long-term tenant mix.
And roughly, what is the loan-to-value ratio in the portfolio?
I think at the end of Q1 it was slightly more than 50%. It was, I think, 53%.
All right. Is it possible for you to maybe gear up the loan-to-value ratio a bit if you want to acquire new properties in the future, or is it a new rights issue we're going to be used to investing in Baltic Horizon? That is the way you take in new money in order to acquire new properties?
Well, we raise a new equity to invest into new properties, also at 50% leverage. All of the income that we generate from operations, majority of that we pay out to investors. And our dividend policy is to pay out at least 80% of the cash flow from operations on a quarterly basis to investors, and I'm happy to say that we have now already paid out 3 times over 3 quarters a dividend which based on the original IPO price in June when we listed the fund in Tallinn is approximately 5.6% cash return.
And good you're saying Tallinn, because this is a secondary listing in Stockholm, which you had in the end of last year. So we have the rights issue being forwarded now. So what is the terms and conditions for the rights issue for the investors thinking about maybe adding new money or investing for the first time in Baltic Horizon?
We are looking to raise up to 50 million euros for this issue in May.
And from the beginning you had 156 million euro for 9 properties, and now an additional extra those millions that you just said.
We have the current market cap of the fund approximately 76 million euros, and up to 50 million euros in equity we would like to raise now for our new pipeline. That means that our portfolio will most likely grow above 200 million euros in asset value. That means further diversification across segments, across the cities, across tenants. And the issue price is the most recent NAV, which is according to the fund rules, and that is the end of April NAV. And the offer is open until the end of May.
All right, so why should investors think about investing in Baltic Horizon?
Baltic Horizon Fund is the first listed real estate fund that offers an opportunity to invest into Baltic commercial real estate, cash flow producing commercial real estate. And investors that are looking for regular dividend and higher yield, our dividend target is 7 to 9% per annum. And the total return target is 12 to 15% per annum. And I think also investors looking for good diversification of their real estate portfolios or real estate investments, or just equity portfolios. This could be a very interesting, I would say, uncorrelated investment producing regular dividends.
You say that the target for Baltic Horizon is long-term investment, but when do you divest? Will you own those properties forever, or will you divest sometime at some point, and at what point?
That's a very good question. You know, when you have a real estate fund that has a term, then you have to divest all of your properties in 1 year when the fund term comes, and that may not be an easy process. What we have now, since the real estate fund is evergreen, long term, we have an exit strategy for each property. So depending on how we see the property performing, what are the estimates for the property, and we, you know, if we have maximized value in one of the properties, then we will sell it. We will not hold it forever.
All right. If we enter a bad market, will you have the possibility to prolong the time that you will own the properties in order to await a bad market?
Well, absolutely. I mean, we are not forced to sell at any time, and that's why we are lending at 50%, because that allows us to have a very good relationship with the banks throughout any cycle. And we have properties that, first of all, have long-term leases, and as well long-term lending contracts with the banks. So we try to stabilize the portfolio to the maximum extent.
You said that you were focusing on cash flow properties, and in my mind what I think about is if you buy a property that has some hidden faults and you need to invest much money, much cash flow in order to rebuild this this property, and you say you had 9 properties, so 1/9 is 11%. Where do you find the properties that you're buying, and has there been any faults in the past buying cash flow properties that you realize that, oof, we need to invest here because this is not what we thought we were buying in the beginning?
When we started out, we had a clear target to buy new properties, and new properties take you know, you can be sure that first of all they're well built, and actually many Nordic contractors build very good quality properties today in the Baltics. And
do you have the Swedes flying over to build you the properties you're buying?
Well, it's mostly the companies that employ the local people, and but yes, sometimes bring the engineers actually, and that has really changed the real estate scene in the Baltics over the past few years. But we target new properties in new established locations because they are more efficient cost-wise, and capex is also minimal, and especially for the first 5 to 10 years. And we are working very hard to increase the dividend flow. And
what do you mean by increasing?
You know, we have properties in our portfolio that we believe hold long-term potential in terms of rental income. Average rent in our portfolio today is 11.7 euros per square meter, and valuation approximately 1,800 euros per square meter, which I think compared to the Nordics is especially cheap, but I think also very promising for the future of some of our properties. So we see a lot of income potential in our portfolio, but also in some of the properties due to the economic growth in general. And that is why we invest in central locations, because we think that that's where the growth will come first.
So we see the rates going up a bit year over year, hopefully in the future.
That's our plan.
And better cash flow.
Absolutely.
Tarmo, thank you very much for coming here in to play again. It's a couple of months since we saw each other last time, and good luck, and yeah, good luck going forward.